Hey, it's Zach from Alpha Charts with a state of the market video. Today is October 1st, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right. Also, catch me on Twitter at AlphaCharts365. If you haven't liked and subscribed to this video yet, stop right now. Please do that right now. Like and subscribe so you get all my updates. I put out a cool monthly charts video yesterday. It really, I think, really encompasses what's been going on. I went from the indexes to all the sectors, and then the largest cap stocks in the market, the ones we all know. Really interesting stuff. Again, it's on my YouTube channel, and also catch link to it on my Twitter page at AlphaCharts365. So check that out. And if you like my stuff, I do offer a super follow group, really cheap price, tons of content, stock picks, markets updates throughout the week, extra videos, all kinds of stuff. So that's my super follow. Check it out if you're interested. All right, this state of the market, SPX. I was expecting a bounce, and every bounce that tried to happen, except for this one on the 28th, failed miserably. Maybe undercut and rally. So maybe we do something like this, but I still think any rally is an opportunity to potentially short. So maybe we get a rally into next week, and then let the moving averages catch up. But look, we have a now declining 50-day, 200-day, 23-day, 9-day. Every one of these moving averages is moving lower. There is no medium to long-term bullish scenario. Maybe an oversold bounce, falling wedge type scenario for a week, for a few days, maybe. But this chart is uber bearish. Again, there's no signs of a bottom here, right? As of today. Let's look at RSP. Actually, you know what? On the week, it was a terrible week too. It was a 2.91% down week, right? Let's look at what the RSP was on the week. 2.45. So yeah, so you could just see how the mega caps really got hit. And looking at RSP, which is the equal weight SPX, again, looking pretty rough overall. You maybe have said, this could have been an area of something. And you see that's about where, this, try to rally into, and it just didn't. And it closed on the lows, and these are 52-week lows. And really, in the end, 52-week lows. That's what they are. So it's pretty bad. It's pretty bad right now. This area below here is roughly, let's see how far it's down, another 10% or so down. That's a very good possibility. Will we go there in a straight line? Probably not, but it's a possibility. All right, moving on. Qs. So again, rough week. You had maybe a little bit, more, you had a flat day here. Then you had this rally day here, which a good decent volume and everything, and people probably thought this was something to be happy about. But like I was trying to show, I believe I showed this on Twitter. I know I showed this to my super follow group. That it was a broadening pattern, right? And this broadening pattern means that more volatility was going to be happening. Now, you never really know which way it's going to happen, but the prior trend is strongly down. So the likelihood is the greater chance of it being to the downside was pretty good. And that's exactly what we saw. Follow through to the downside. And this looks pretty nasty right here as well. Again, heavy selling along the way. Again, will we get a rally? Absolutely. We're going to get days like this. For sure. You saw it right here. You saw one right here. You even saw 4 days in a row right there, right? This was looking kind of positive above the 50-day and so on, and just completely fell apart. Again, back to 52-week lows, multi-year lows, really. And things just aren't looking good. Trend line below is another 9-10%, right? And so that is likely a spot in the future over maybe it could be over the next couple of weeks. Again, as it zigzags lower, this 245-ish area, maybe going down to 235, somewhere in there. I could see that as a possibility. Anyway, on the week, Qs were down 3%, and equal weighted Qs were down 1.6%. Again, it kind of shows you how rough it was. I mean, we've been talking topping patterns now since 2021. Again, I probably wasn't talking about back here, but in this area, I know for sure is when I drew in this topping pattern and this larger one that was kind of forming. So by October, November, I was talking this, talking it and doing it 200 things. We were still above moving averages here, but anyway, we could see how they did play out. Yet if we lose this area on the equal weights, the next big area is going to be far below. So we'll see what happens. Again, no one says it has to go down that far, right? It could be just another 5 or 10% down, 15%, who knows? But again, I go over that yesterday even in more details. IWM, let's see what we got going on here. Again, back to this line in the sand, this box I can easily, make lower, probably should be like bigger like that. Again, do we get a bounce here? Maybe we get a bounce, but with everything, I mean, hooking lower, moving lower, every bounce is suspect at this point. No reason to think that it's not. Again, major support is 20% lower, 25% lower. Mid caps, MDY. We got major, it's actually been holding up better than everything else, and that's the 10% range. So that's kind of interesting, right? Mid caps have been holding up better than most of the others. Let me see year to date, or from highs to lows, 25%. So a little bit better than the Qs at least. Let's look at IWO too. What does IWO look like? Yeah, had that little bit of bounce. Wasn't even that good, but a little bit better than most, right? Didn't close on lows. Expectation though is that this will fail and come on down to this area. And again, I like to measure these. Yeah, 23%. Okay. So that is indexes. Let's go to sectors. XLF. Big spot for XLF. Big spot. I mean, let's go to the weekly chart. Again, we've been hammering the point of this support area right here. And that if it has to hold its support, if it doesn't, and this breaks down, we can expect, more of a, we'll call it a worst case scenario, in my opinion, right? Worst case scenario, if this breaks down, if this area holds, then I think that maybe we can start looking for bottoms. But again, if we take out $30 on a closing basis, that's a big problem. Very, very big problem. And right now, there's nothing saying that we won't take out $30, right? There's no indication here that we're going to take out $30. So my expectation is lower. All right. It's not because I'm bearish or I'm bullish. It's just what the charts are showing me. Let's look at SMH. Again, do we get it maybe undercut and rally up? It's very possible. But overall, this just looks terrible, right? And again, multi-year lows. Next big area of support, could be 20% lower, right? Anywhere from, I mean, who knows where it's going to, where it can hold, but, anywhere from 12% to 20% lower, right? These are semiconductors, the backbone of most of our industries, and they're going lower. What does this tell us about future expected demand? It means there isn't much, right? Transports. We had this little bounce right here. Great. Overhead support became resistance. This is where supply was found, and transports are going lower, right? At least that's what it looks like to me. Again, you're closing at multi-year lows here for transports. What does that tell me? It tells me that, movement of goods is probably going to be slowing down. Whether you want to call it recession, whatever, this is a very bad look for the economy. So financials look like they're about to break down. Semiconductors are breaking down from a very important level. Transports are breaking down. Home builders, holding up better than transports and semiconductors, but still in a very strong downtrend, and likely going to hit another 15% or so to the downside. Again, this line right here, just so you know how important it is. It's from 2006, right? Huge spot for home builders. It's when this index came online, and that's basically the top of the housing market. And then it hit again 2018, 2020, and good chance we hit this $46, $47 area again, right? Which is about 15% lower. And then that's a place where we say has to hold. If that doesn't hold, the housing market's in really bad trouble. Again, why is housing important? One, is a huge driver of jobs in our economy, and also it moves goods and services and everything else as they're being built. And new homes, use a lot of those, again, jobs and goods and services. So again, those are the four of the sectors I look at to really show what the economy is doing. And they're not looking so great right now. They're breaking down. There's no sign of them on the rebound ahead of the indexes, right? That's kind of what we're looking for. These subsectors these sectors, I should say, and subsectors should be rebounding ahead of the indexes to say, okay, good times are coming. We're looking out, 3 to 6 months and things are turning around. They're not saying that yet. Let's go look at some internals now. All right, I'm going to take off my moving averages and volume because I don't use them when I look at internals. And a line chart. Let's look at the VIX. So all this carnage, and you think the VIX would be spiking. So yes, the VIX is elevated, but it's not spiking higher, right? So it's not like saying, like, at least the market hasn't initiated the holy crap capitulation type move yet. It just hasn't. Yes, it's elevated and it may vacillate through here and maybe gets through an area and it comes back in and whatever, and market goes up a little bit, whatever. But until we see a capitulatory move, right, a big spike, into that 38 to 40 level, I think that's where it needs to be. 38 to 40, 36 is fine, I guess, whatever. A big spike into that level. VIX really isn't saying that we're near any kind of sort of bottom, in my opinion. Just my opinion. Credit spreads, right? So once again, yes, they're widening. It's bad for the market, but it's not a capitulatory move that we're looking for like this. And let's just go back in history. Capitulatory move, right? Capitulatory move, moved higher very quickly, right? This doesn't look like any of those prior experiences. And so we say bottom isn't around the corner. At least that's what I'm saying. Put call ratio. Market's terrible. So you think everybody would be positioning extreme, not saying that they're extremely bearish, but positioning extremely bearish. It's not. So there's a lot of ways to measure sentiment. This is my preferred way. And it's just not bearish. People are buying the dip. People are buying calls. They're buying puts too, but almost in even amounts. Everyone is not on one side of the boat. We would see in capitulatory moves, everyone on one side of the boat. Look at 2020, COVID, right? 2019, 2018, right? You can see all these times where people got on one side of the boat and they were better, more realistic signs that a bottom is coming. Maybe not, it's never be perfect, but a bottom is coming. And you see the moves off the bottom, off these big moves, were pretty good, right? Pretty good. So again, this is telling us it's just not there. But how bad is the market really? Let's look at breadth. So NYSE percent of stocks above the 50-day moving average, we're under 12%. That's a bad, ugly number. That being said, it's not extreme. It'll get there. I think. And again, when we get a move into this extreme level, maybe that will be what we need for all those other things also to capitulate. Again, this is going to vacillate, but it has never gotten into this my green zone, which is 10%, right? 10%. It never got into the green zone. Got close, and you see the washout into the green zone only happens every so often, right? So we're not like looking for a signal that works, that hits a lot. We're looking for a rare signal to tell us that things are washed out. And we're close to it, but it ain't there. So take that as you may, right? And then let's look at Bitcoin. Bitcoin, surprisingly, holding up, right? But holding up, but still not looking great. Good chance we still need that big flush in Bitcoin as part of the move. Again, is Bitcoin that big of a deal in my analysis? It isn't, but I think that will play into that role too. And then when that flush happens, it probably means that something broke in the market, okay? And the Fed needs something to break to stop raising rates. They're going to keep raising rates until something breaks. Okay? And we don't know what that's going to be. A Lehman event, a bond issue, a country failing, Putin doing something stupid, who knows? But whatever it is, I think the Fed, unemployment spiking like crazy, a bad recession on the horizon, or maybe it's already on the horizon, who knows? Something's got to break, and then the Fed will pivot at that point, and then the bottom will be close, and the markets will tell us. I don't think that we are, the charts aren't showing that. And again, I would be careful. The month of October, it could be a very treacherous month. I think there's extreme caution to be had for this month. Again, you want to look at my monthly charts? I made the video yesterday. I think it's an eye-opener. It's worth it. Put it on a fast speed, roll through the video. I think it's worth your time. Anyway, state of the market, ugly, nasty, gross. Yes, we're going to get rallies, but chances are lower is the likely scenario. And save your mental capital, your physical capital. There'll be better times. This isn't one of them. Y'all take care. Good luck this week. Bye.